for the folks who see, all right, gold and silver, we get it. They're writing a lot of paper. It's manipulated. Don't know when, but at some point the price is going to go up. So if they're expecting higher bullion prices and interested in mining stocks, what's really the stage of a miner or explorer where, to me, I always thought, if I'm really just trying to amplify my bet on the price of metal, I probably want the guy that already has it or they know they have it, as opposed to someone who's exploring where you have a different set of risks where they may or may not find it. So for folks who really just see higher bullion prices, what kind of miners would they be well served to look at?
It's kind of like everything else. I think you want a diversified portfolio of some large caps, some mid caps, and some juniors. And there's obviously different gradations of juniors, and it just depends on what your risk tolerance preferences are. Again, it's like everything else. I wouldn't buy stocks like Newmont and Barrick. I think they're gonna, assuming that this trend that we're in right now continues higher. And believe it or not, if you look at charts, gold's actually been rising since mid-August. So it wasn't just like, the move from 1285 to where we are now came out of nowhere. It's been in a steady uptrend since mid-August. The mining stocks, if you just use GDX as a proxy, those have been in a steady uptrend since mid-September, and silver's been in a steady uptrend since mid-October. And those are all kind of classic characteristics of what we want to see in the early stages of a bull market. So at some point, I expect silver to overtake it all and outperform mining stocks and gold. And when that'll happen, I don't know. And specifically, silver stocks will probably outperform all the other mining stocks. So if I was building a portfolio, that was going to be a buy and hold portfolio, I'd put some large cap stocks in there. I like Agnico Eagle. I think it's a really well run company, and that would probably most of the large caps I don't really care for. Many of them, like Newmont and Barrick, are depleting their reserves faster than they're replacing them, and that's a problem. But the juniors will benefit from that. The juniors that can find actual deposits that are mineable, they're going to be acquired by the Barricks and the Newmonts and Agnicos of the world. So, and then there's some mid-cap mining stocks that I like. And again, a blend, you want to buy a blend of gold and silver producers. The easy way to do it is just buy SSR Mining. It was historically a silver mining company, and now they're diversifying into gold, and it's been a great performer over the last year relative to the sector.
Right.
So, and then, the juniors, I don't want to give away, the stocks that I put in my mining stock journal. I like to try and keep those as much as possible proprietary to subscribers. But, there's some junior stocks that are just now starting to explore and develop property, and those are potential 10 baggers. Of course, they're potential zeros also. Right. You probably want a couple of those. And then there's juniors that are in various stages of development and defining deposits, or juniors that actually have defined deposits, and you probably want a handful of those in your portfolio also.
Would it be fair as a general rule to say that in the juniors you have perhaps a higher ceiling or upside, yet on average a lower chance of hitting that than perhaps a more advanced stage company?
Oh yeah, if you look at a risk return curve, certainly the juniors are extremely high risk, high return. Now, I will say that the expected value, if you buy a portfolio of junior miners right now, the expected value risk adjusted is higher than it would have been in 2011 after that big run up. I mean, a lot of these juniors are selling, kind of below what I would define as their intrinsic asset value.
They've gotten beaten up pretty good.
Yeah, I mean, I'm looking at I was just doing part of the write-up for my next mining stock journal, and I'm looking at a junior mining company, and I mean, this company already has a deposit. I mean, if they wanted to stop all their exploration and just mine the 1 million ounce deposit, the stock probably would be capped in the market at somewhere between 70 million and 100 million. I mean, the market cap of the stock's $15 million. I mean, it's ridiculous. So, you know, and I don't want them to do that. I want them to keep drilling their property because they could be sitting on a massive gold mineralization system. It looks like they are by the, you know, indications of all the drilling they've done so far. So, you know, and the market doesn't care about it. They release really strong drill results and the market yawns. So, but to me, that's a value play at this point, as opposed to just, you know, I like to call the junior explorers venture capital companies, because that's basically what they are. Raise some capital and try to find a gold deposit in an area where you think there's a likelihood that there might be a gold or silver deposit. But now, like for instance, this company I was just talking about, I mean, I look at that also as a value play, not just a venture capital play. So
Yep.
that's how undervalued the juniors are as a sector relative to the rest of the sector and relative to the stock market.